Good morning, all. Camelback Trading 2724 and the PitFuturesTrading.com. Coming to you this Thursday morning, January 30th. We're looking at the last 3 days of the market profile of the SPY ETF. A lot to talk about. So let's start from the beginning and from the all-time high. So we made the all-time high on January 22nd. Said we had some decent excess up there. See if it holds. Well, next 2 days we went down. We had an outside day down. Looked like maybe we were going to roll over. Had a tremendous gap down on the 27th, only to be taken back in 5 time frames the next day and even gap higher yesterday. But a bunch of things have happened since then. Number one, even though we got into Friday's range both days, we never even got close. We got to settlement, never even got close to the afternoon rally high, let alone those 4 sets of single prints. That's number one. Number two, yesterday at 2 p.m. after the Fed's announcement, we spiked to a high in the day. Quickly got rejected, got underneath the opening. Now, this was even before the press conference started. On a normal trading day, if that had happened and got below the opening, I would have been short. It would have been a great short, because all the market did for the next hour and a half as the Fed spoke and spoke and spoke was continue to go down, and any rally was met with a smack in the face. We were saved from a price probe by the bell to the downside. Maybe that was a good thing for sellers, because any downside price probe's been rejected. So we don't have the price probe, yet look what we have this morning. We have another tremendous gap. That other gap was 224 points. Now, there's still an hour to go prior to the opening, but right now that gap is at 230 somewhat points. So it's going to be pretty comparable to that last gap. Was this just, even though remember we had that trend day, but I said it was a P shape. Now, yes, it certainly wasn't a P shape, but all this was possibly was a relief rally. Now, one other thing to talk about before we start getting to things. This is a pretty amazing stat. Including today, it will be 20 trading days in the new year. We have 14 gaps out of 20 trading days. 8 to the upside. This will make 6 to the downside. That is not normal. That is total irrational, emotional, non-thinking trading. We want volatility. Well, we certainly have it back. And this is only January. Wait till we get closer to the election. So, market-generated information is more important than ever. Just keep that in mind. 14 out of 20 days with gaps. All right. We said there's been voids or vacuums to where price is on both the up and down side. Well, again, that's occurring today. And right now we're trading at a very visual level where we had a daily low of around 324.55. If that doesn't hold, you're going to revisit that 322 level we spoke about earlier in the week. All right. Destinations for today. Well, I would think this gap should hold at least pre-market. You never know afterwards. So we're going to use yesterday's low of 326.40 as your first upside destination. My pre-market high is even higher than that at 326.62. So right now, 326.40 will be your first upside destination. If by some chance you're going to fill that gap, then you don't have anything until 10 wide from yesterday at 327.86 and yesterday's high of 328.63. So again, until you get more market-generated information, there are some huge voids on both sides of the market. For the downside, these single prints, the trend day, right? Trend days to be taken back, it's usually late in the second day or the third day. Well, this is day 3 and it's being taken back. We didn't take back the 4 sets from the upside from Friday, right? Usually, that doesn't mean they're not going to be taken back at some point, but they usually hold longer if they're not taken back by the third day. Okay, so right now this trend day looks to be gone. Below that, I said there was a void, and we're right at that void. 324.55, right at it, the daily low from the 28th. Then 324.51, the 10 wide that we got right down to on the 28th but didn't touch. And then below that, we have nothing into 322.66. And then below that, we have 322.64 afternoon pullback low from January 7th, 322.24 daily low, 322.14 afternoon pullback low from the 6th. We have a set of single prints from January 6th, 321.88, get filled at 75, and then two important numbers. I know I've given them to you. Right now, 320.36. It's a weekly low, but with 2 days to go in a month, it would be this month's low if we don't get there. And then 320.15, which is a weekly low. So, vacuums, voids. If this 324 level doesn't hold, the 322 level's next. If that level doesn't hold, then we're going to get to that weekly, possibly monthly, and the other weekly low. Game plan. Way too big of a gap for me to take a sell position. Right? Way too much. I certainly don't want to take a long position either with value low and a huge gap. Yes, I'm saying this is an important level. So if we open right around it or above it slightly, if you want to take a call position just to see if we get some inventory adjustment early, you can do that. But rest assured, if you do take out that low and that 10 wide and it doesn't act like much of a speed bump, I'd be out of that trade because there's not much below it. Keep that in mind if you take that trade. Okay? Now, again, just like the other day, the odds of a gap this big, if it stays this big, we still have an hour, but the odds of a gap this big being filled the first time are not that good. Yeah, we did it on the 28th, but that's a rare occurrence. So I would look possibly for an inventory adjustment a little bit to get involved on the short side. My out would be the gap fill. Now, and I'm not sure if I would do it. If I did it, it would be with small size. I would maybe take a call around the 28's low and that 10 wide to see if we find some buyers there again. If we do, I'm not thinking it's going all the way back up, but at least it would be something maybe where you could ride up and make something out of it. If this gets taken out and accepted below, get out of that trade. Okay. Chart-wise, like I said, 2 days to go in the month. Barring a really, really big sell-off today and tomorrow, and that's not out of the picture. One time framing up for 3 months with the gap still healthy, even with this sell-off. Although the question I asked yesterday, is that excess at the high? Weekly, balance for now, I'm calling it. Rejected at that trend line yesterday on the weekly. Daily, certainly in balance again, right? We're right at the previous day's low. We're going to be put into a 4-day balance. If this doesn't hold, rest assured that's your next destination. And if that 322 level doesn't hold, then we're going down to around the 320 level where we have that weekly gap and the 50-day moving average. And one other thing I want to show you. You know, people talk about Apple all the time, and with good reason, right? It's owned by just about everybody in the world, and a lot of people think the way Apple goes, the market goes. Monthly right now is one time framing up 5 months. It's still very healthy. Weekly, with 2 days to go in a week, believe it or not, you have a chance for an outside week up and an outside week down. That'll be interesting. But here's the one I'm looking at, which I think is very important. They gapped higher after the earnings to an all-time high. We're about to gap lower today. Right? That's a true island top if it holds. Now, yesterday's low was 321.38. We're trading at 320.35 pre-market. That's something to keep an eye on. If you fill that gap, All you are is in balance. But if they're not able to fill that gap, at least initially today, and continue a downward move, it would be something to keep an eye on. Good luck trading today. Be smart. There will be plenty of opportunities even if you do nothing the first half hour. Have a great day trading, and we'll recap at 4 p.m.